Abhijit, good to have you. The market seems to be polarized, Abhijit, based on the discussions that we've had over the last couple of weeks. There's an equal number of people believing that the earnings might not be as robust, RBI may not be as proactive in the rate cuts or the talk of the cycle as well, and that may actually result, coupled with the GAR issue, in some downside in the near term for the markets. Which side are you on?
I am bearish on the market. I don't see there is any triggers to continue to take the market up. The first quarter of this calendar year we have seen a huge rally, mainly because of this global liquidity thing, and I now suspect that this liquidity will not continue for too long in the course of the year, because I think the expectations of QE3 or another LTRO might not fructify. So after some time, I think this global liquidity will also sap out of the Indian markets. As far as domestic factors are concerned, I think all these events which were expected to provide a fillip to the market have failed to do so, whether it was monetary policy or budget or state elections. Those have failed to do so. And fourth quarter earnings season in particularly is not going to be a trigger at all for the market, because I think the earnings season we will see Nifty or index earnings maybe about 8 to 10% kind of a YOY growth, which might be a marginal uptick from the third quarter, but nothing great to cheer about. Till the time we see a pickup in the investment cycle in India, both from the private as well as from the government side, I don't think that we are going to come back to a sustained bullish pattern in the market. And the factors which are going to be required to do so, to be enabled to bring back this investment cycle pickup in India, are still missing. So till the time we see those factors coming in place, which can then generate the hope for a revival in the economy at a sustained basis, till that time I think we are going to see a very dull kind of a market. Having said that, I don't think the market is going to fall off much below 5,000 levels. My sense is that perhaps we will see Nifty trading between 51 to 54, 55 kind of a range, and which essentially means that we are looking at a prolonged bottom formation in the market.
Sitting with your prognosis of it being extremely range bound, what happens to the commodity names, because they are the ones which are exhibiting some serious pressure, and the thesis really is that if global demand isn't particularly strong, then the prices of the base commodities as well need to come down. Would that lead to further weakness in the commodity names? I'm essentially trying to get a sense from you as to what happens to names like Hindalco and Sterlite from where they are trading right now. You think there is more downside?
Yeah, in the entire commodity space, if I can just talk about certain segments. If you're talking about copper, aluminium kind of metals, I think the slowdown in China is going to have an impact on the prices. But interestingly, what one should also notice is that a lot of smelter capacities have closed down worldwide, which to some extent balances the demand-supply situation. And I think that is the reason why LME prices have been pretty stable between $22 to $2,300 for aluminium. So on base metals, I'm not too worried, because I think the correction which is likely to happen because of fall in demand from China is also being compensated by the closure of several production facilities across the world. In case of steel, I'm slightly more positive, especially for steel companies which are based in India, like Tata Steel, because I think the domestic steel prices, because of the import parity, are still stable and seeing some kind of an uptick on a quarter-on-quarter basis. Whereas because of the slowdown in China, the fall in the raw material prices, whether it is iron ore and coking coal, is much more than the drop in the steel prices. So on a sequential basis, there could actually be an improvement on the EBITDA margin for domestic steel companies. Cement is another commodity where we were very positive some time back. And though the news flow on those sectors continues to be strong on price increases, I think we're getting into a monsoon season where we might see some kind of a reversal on the price hikes that have taken place already, and some kind of a slowdown in volumes as well. And given the fact that valuations are very high now, would be cautious and recommend profit booking on cement stocks.
I'm guessing from your answer that the quarterly numbers, if they are good, would probably not have the desired impact for the bulls in cement in particular. So watch out for some of these names. The other one in particular, Abhijit, if you track Ranbaxy in particular, I mean, it's had a bit of a run of its own after languishing for a really long time. Couple of upgrades have come in as well. But are you, as a house, are you guys bullish on Ranbaxy? And you think there is more upside in terms of earnings or a couple of triggers coming in for the stock over the medium term? Or it's had its fair share of run in the last 4 to 5 trading sessions?
Yeah, we are positive on pharma space overall because of the fact that the domestic growth story continues to be robust, as well as the fact that the pipeline of new drug launches for most of the Indian generic companies is strong in the US market, which is the single largest driving factor for the Indian generic companies. So these two large markets are continuing to do well. And given the fact that rupee is also going to be in favor of the pharma companies for this quarter and also expectedly next quarter, we will be positive on pharma companies, and also because this is a sector which has not performed as much as some of the other delta names have performed in the last rally of a quarter or so. And specifically to Ranbaxy, yes, the stock has been beaten down and had faced a prolonged session of underperformance because of its FDA concerns, and which was prohibiting it from launching new drugs. But now I think gradually all those things are in the price, and we are hearing some positive news on those fronts, whether it is FDA giving an approval for a drug from Indian manufacturing facilities. I think going forward, the view on Ranbaxy is that I think the worst is already there in the price, and with the new approvals for the company coming in USA, as well as the fact that India is continuing to do well, I think the bottom is already made on the stock, and one can continue to look to buy it. And overall, I think pharma looks a much safer bet comparatively to some of the other sectors in the market.
Right. Abhijit, what about niche market segments or sectors such as broadcast? I mean, there is, of course, a lot of corporate interest and investor interest coming in there in this space. How would you approach the sector, whether it's DTH, broadcasting channels, etc.?
You see, the sector currently is being driven by policy announcements, as well as the fact that there could be some M&A activities also taking place, which has been taking certain stocks prices higher. To that extent, there could be interest higher. But media as a theme, I'm not too bullish, because the subscriber growth is not keeping pace with the assumptions that were there, and also the fact that the advertising revenue growth has actually going to see a decline on a YOY basis. So media overall, whether it is print or electronic media, I'm not too gung-ho, but companies which are going to be impacted by policy announcement as well as M&A activities, and quite a few of them are there, those can continue to be in the limelight, not for the earnings or valuation reasons, but for different market perspectives.
Abhijit, this takeover tussle, I don't know how closely you track this space and these two companies, or these three companies in particular, but IVRCL has had a splendid run, and it's showing in a couple of these subsidiaries as well, IVRCL Assets, Hindustan Oliver. But what do you make of this whole takeover tussle? I mean, there are various rumors floating around, but broadly, is this a good enough reason to probably look at IVRCL or maybe a couple of other infra names as well?
So the media report do suggest that there is a takeover battle which is on between SL Group and Mr. Sudhir Reddy promoted group. But it will be not wise to take a call or stock call based on this kind of movements. We don't know whether the original promoter of the company is hiking his stake or not. In all likelihood, see what happens. There has been a case of Bharti Shipyard and ABG Shipyard taking the great offshore stock price to an astronomical level during their takeover battle. And yes, the retail investors did participate and made a lot of money in that. But from a fundamental point of view, these kind of bets do not make sense. If you are nimble-footed enough to make a fast entry and exit, then it's a different case. But purely on the business model and the earnings valuations, these things cannot be justified. But from all media sources, one can make out that this takeover tussle is going to continue for some time more, because there is going to be effort from both the sides to maintain the controlling stake. But the point is that since both of them are at 11 or 12% kind of a range, it's a long way for either of them to gain the majority stake and convince the FIs to support either of the group. So it's going to be a murky battle, but maybe in the process, just as we have the example of Great Offshore before us in a couple of years back, it's possible that the stock price can go to maybe 90, 100 levels also. We don't know, which is got nothing to do with the fundamental valuation, but so be it.
And I want to ask you about these, Abhijit. BGR in particular, and if not BGR, a couple of other names. There's the likes of Syntex, Pooj Law, you name it out there. Not an L&T and a BHEL. Mid-cap capital goods, how do you play them for the next 12 months? You think there is a possibility of the order cycle improving, if not in the first quarter, then maybe later on? And is this a good enough reason or a play to buy some of these stocks, or you would stay away? A BGR in particular, if you can.
We have been continuously negative on capital goods and infra space, and till now we don't see any reason to change our view. The order inflows from power sector, from government sources as well as from private capex, everything continues to be very slow. Whatever order flows are coming, even this particular order that you're talking about, which VGR has got from NTPC, whatever order is coming, these are extremely competitive bidding based orders, because of which the margins are also going to be less. I'm not too sure whether Vijay will be making too much money on this order that we're talking about. So though there were L&T, BHEL, VGR, all the large companies participated in it, it is the extensive aggressive bidding by VGI which has managed them to get this order. So which means that the EBITDA margins are going to be on wafer thin basis. So overall, whether you talk to Thermax, which is a perfect example of your industrial capex cycle, or you look at order outflows from Power Grid and NTPC, not much is happening in terms of pickup in the order flow. And at the same time, the domestic competition is increasing, have increased many-fold over the last couple of years. So I think the margins are also going to be subdued for most of the players. So we continue to maintain our negative view on capital goods as of now, and till the time we see a definite pickup in the investment and capex cycle, I think we will stick with our negative view.
Abhijit, you track any of the UB Group stocks? I mean, they are having divergent moves with KFA doing what it is doing, but United Spirits has been in a splendid run, doing very well. There are talks of probably some value buying in UB Holdings as well coming in, but United Spirits in particular, and if not, maybe even a KFA if you have a view there.
Kingfisher Airlines obviously is a sell, and I think it's a matter of time when the company finally goes under. And because of the exposure and the involvement of the promoter of UB and US in Kingfisher, there is a lurking fear among the investors that even those two companies could come under huge stress. Interestingly, only UB within this entire Vijay Mallya group stands out, because United Breweries has a holding of Heineken, which now is going to be the largest shareholder. And Heineken with itself brings about a lot of credibility in management, stability, as well as new product. It actually ceases to be a Mallya company, it becomes a Heineken company, UB. To that extent, though valuations are astronomically high, there could still be some interest in UB. As far as United Spirits is concerned, I'm very surprised by the up move in the stock, because a lot of shares, I think the majority of the promoter holding in the company is pledged with banks and financial institutions for the Kingfisher loan. And at some point of time, there could be a pledge sell call taking place on those shares. So United Spirits, I am very, and I would recommend investors to be very cautious and get out of that stock. United Breweries could be a different story altogether, because effectively it's going to be a Heineken company going forward.
Okay, do you buy anything in banking, Abhijit?
See, I have been pretty negative on banks, but my sense is that this expectation of a rate cut in April may not materialize. We might still see some kind of a CRR cut, maybe 25 or even 50 basis points. There could be a disappointment that the rate cut is not happening, because I think the fundamentals at the ground level do not really warrant a rate cut at this point of time. But even a CRR cut would be positive. It should be viewed positive by the market, in the sense that it should help indirectly soften the rates in the overnight market as well as the bond markets. And the fact that today the demand for credit from the corporates is more in the short term and working capital segment. And if CPs and CDs are trading at 11% plus, banks too have the chance to charge that kind of a rate. So I think the margin pressure might not be as significant as we were expecting. My sense is that the things continue to be little difficult for the banking sector, especially from the NPA perspective. But I think we are somewhere near the bottom. It is for sure that the CRR cut has started to happen. Rate cuts will happen, if not April, then maybe in June. We are in the peak of the rate cycle. It has to start coming off from here. So put all things in perspective, though pressure points continue to remain in the banking sector, but I would still suggest to buy some banks at the lower levels when the market is giving you opportunity. Of course, the favorite picks would be the private sector banks, whether it is ICICI Bank because of its improvement in asset quality and high CASA, or IndusInd Bank, which is an extremely high growth story. And even in some cases, even PSU banks, I would actually like to look at now SBI from the current levels.